ICICI Lombard, India's first general insurance company coming out with its IPO. We have with us the chairperson of the company, Ms. Chanda, Kochhar, also the MD and CEO of ICICI Bank. Ma'am, just wanted to first bring in this question about the valuation, because that's something that seems to be on the minds of everybody out there. 30,000 odd crore worth of valuation for the company when you look at the pricing of the deal. What do you think that is a little too high? Maybe there's some arrangement, because the last deal that happened in the company was probably priced much lower than this.
Well, I think as company management, we all can talk about the company performance. I think valuation is really how the bankers assess the market and what the current situation in the markets is and what is the strength that they perceive of the company. But I must say that the last deal that was done that you were referring to was really more a bilateral deal between one buyer and one seller. This is when there was no liquidity in that stock, when there was no clear visibility of when a listing would take place. Now we are talking of actually listing the company, making it a liquid stock, and of course backed by consistent good performance year on year.
Okay. Ma'am, when you're looking at the company's performance and how ICICI Lombard has maintained that leadership position, what are some of the key points do you think that probably make it a good investment option?
Well, talking of the company and its strategic framework, I would say that the company has been the largest non-life insurance company in the private sector and has consistently maintained that leadership from 2004 onwards. Not just that, actually it's built a very strong business framework. So it's been a leader in each one of the segments of the general insurance company. It has built a very strong multi-channel distribution architecture, and each one of the channels is pretty strong in its respective segment. The company really leverages technology, in order to increase its access, in order to improve its distribution, in order to improve claim settlement, and in order to improve its efficiencies inwards. The company has a very sound, risk management framework. The company follows very prudent and conservative reserving guidelines, and the company has been generating very good returns on investment as well. So overall, it's created a very strong business framework built on these multiple strengths, and has generated a return on equity of about 15% in the past few years that you can see, and has a strong dividend payment record.
Right, ma'am. You mentioned risk management. Now, I want to bring this up because we are talking about increasing the penetration of the insurance sector, reaching out to more people, getting them insured. As this improves, and as many more people come into the fold and their risks, the company is exposed to those risks. Do you think this risk management, that play would still be, the company will be able to maintain that?
Well, in every growth scenario, I think it's important for every company to operate on that most optimum curve of risk and return. And the issue is that even in the past, healthy growth stage, the company has managed to keep a very prudent and sound risk management framework. In fact, this is the first company in India that actually even declares the risk triangles. So I think it has continued to maintain that even in the past growth phase.
Right. And when we're talking about penetration, how exactly is this way forward? Because we've seen efforts from various companies, private as well as public sector companies, to improve the insurance penetration. What will ICICI Lombard's strategy be?
So I think part of it happens as the markets and the economy develops, part of it happens as the demography evolves, and part of it happens through specific companies, specific efforts. But I would say that as far as the economy is concerned, there is more and more formalization of financial savings. That itself leads to an increase in penetration of all the financial services products. With that, you juxtapose the fact that the general insurance industry is only 0.77% of the GDP of India, which is 1/3 of the global average. The general insurance density, that is per capita premium, is much lower than the world average. And as the economy, as the demography kind of earns more, aspires more, there's more awareness of the risks that need to be ensured. There are new types of risks that emerge in the economy, like cyber risks, etc., which need to be insured. So given all this, I think there is a huge growth potential in various segments. Against that growth potential, this company will use the basic strengths that I spoke about, keep abreast in terms of introducing new products, using all its distribution channels, extending its distribution, using technology and so on, and that's how it will continue to grow.
All right, ma'am. Thank you so much for joining us on Bloomberg Quint.